Ladies and gentlemen, the Honorable Dr. Ramadan Dr. Rusdia Inhan and all of my beloved friends. Assalamualaikum warahmatullahi wabarakatuh. First of all, let us thank the Almighty Allah Subhanahu wa Ta'ala because of His blessing we are able to come here in this English presentation meeting. Ladies and gentlemen, the presentation today is about
Cash and cash equivalents.
now. I will read one by one our agenda today. The first session is opening. Let's open our meeting by saying Basmalah together. Bismillahirrahmanirrahim. And the second session is introduction. Let me introduction myself and my team. Hello, my name is Pilza Hazira Inara and I will be moderating discussion. And the name is Lutfio Azhar Utika, and the second name is Subianti Nursyah Manipura, and my team class name is Epi Lestari. The third session is presentation time. For the first show will be given by the first presenter. Please welcome Lutfio Azhar Utika.
Hi guys, okay, I will start from the first material, cash. What is cash? Cash is a financial asset that is used for a company operation. Input in cash are a payment instrument that can be used immediately, like coins, money, and checking accounts balance at banks. Cash is the most liquid asset, which means cash can be withdrawn and used at any time when the company needs it. Cash also standard instrument for transaction because cash is the most liquid asset. Cash is used as the most common standard of exchange. Cash also current asset, referred to as current assets because cash can be used to finance the company and operation and at investment. Cash also consists of currency held into entity, money held in banks account and cash equivalents. Cash report, restricted cash. Company must separate restricted cash from a regular cash and report them as a reserve fund. For example, cash restriction for 1. Settlement of short-term obligation, 2. Settlement of long-term obligation, and 3. Compensating balance. Bank overdraft is a condition in which the number of checks drawn in the account exceeds the cash balance. Bank overdraft reported as a current liability and can be accumulated with another accounts if only if they come from the same bank and there is an agreement that allows transfers between accounts at that bank. Cash equivalents are highly liquid short-term investments. Cash equivalent can inverted in cash at a certain number without the risk of a change in value. The size of the majority of cash equivalents is usually 3 months. Example, time deposit with maturities of less than 3 months.
Next round is for the second speaker, Febianti Nursyah Anugrah. The floor is yours.
Hi! Next, we will talk about cash control. There are several forms of cash control, namely 1. Segregation of debts between the party that authorized the payment, the party that managed cash and records, the users, and the paying party. 2. Use of a safe to store cash or in closed room with limited access. 3. Cash receipts and disbursement using different accounts. 4. Money is disbursed through banks and using checks so that there is control over recording by other parties. 5. Cash receipts are made through banks for security and records control. 6. Use of petty cash improves system to meet petty cash needs. 7. Reconciliation between companies' records and bank statements. Okay, next is Petty Cash Fund. Petty Cash Fund is a fund formed by the entity to meet the needs of cash disbursement in small amounts, the amount which is adjusted to the needs of the entity. An example of petty cash receipts report table from like this: there is a date, receipt number, approved by, received by, description, and amount. So, there are two previous systems, namely the impress system or fixed funds and the floating system. Impress system is petty cash mechanism where the amount of fund is maintained constant, and floating system is petty cash mechanism where funds are not set or a certain amount so that the balance varies from the time to time. Next is bank reconciliation. Bank reconciliation is determinants of the items need to match the difference in cash balance from the company's recording result with the bank statements. In general, the cost of difference in cash balance are as follows. 1. Receipts by the bank but not yet known by the entity. For example, a customer who pays off receivable by transfer and has not notified by the entity. And 2. Expenditure by the bank but not yet known to the entity. Example, admin fee, bank, auto debit for installment payments, and utility expense. And 3. Deposit in transit per outstanding check. And 5. Error recording both the entity and the bank.
Thank you for all of the presenter. And now, the fourth session is conclusion. The conclusion of presentation by A.P. Lestari.
Then cash and cash equivalent conclusion. Cash is a financial asset that is used for company operation. Assets included in cash are elements of payment that can be used immediately, such as banknotes, coins, and checking account balance at bank. While cash equivalent are equally short-term investment. Therefore, investments are generally classified as cash equivalent only if they have an immediate maturity of 3 months or less from the date of acquisition. Cash in deposit with maturity of less than 3 months and are no existent conversely can be categorized in cash equivalent. For the purpose of preparing financial statement, cash and bond are reported at nominal value. The treatment of cash and bond in taxation and accounting is generally not much different. The tax provision do not regulate in detail the technique and method of cash and bond bookkeeping. Therefore, accounting practice they regulate the techniques of cash and bond bookkeeping, but this can be fully followed.
The fifth session is closing. Let's end today's presentation with this quote from Madam Mahatma Gandhi that says, "Our greatest ability as humans is not to change the world, but to change ourselves." Finally, we are come to the last agenda. We would like to say thanks again for the presenter and all of the audience for active participation. Hopefully, the presentation will give benefit for us. Thank you for attention. Wassalamualaikum warahmatullahi wabarakatuh.